Hi, it's Marco here. So the Federal Reserve hasn't crashed the market yet. I know what everyone is telling you. Yes, the crash has just happened. We are now moving up, and that's where we're going. We're just going to the moon. Well, what most people have actually not understood is that there are a number of things that are having an effect on the Fed, are having an effect on the economy and obviously the stock market. And it's not only interest rates. So I've been telling you since last November that the taper that the Fed had in the plan would actually create this kind of pullback of the market. And so congratulations if you subscribe to this channel, because you were forewarned and you knew that there would be a pullback at least. And as I told you at the beginning of this video, the bigger crash has yet to come. And so there are two things that we actually have to have a look at, and the Fed is using as tools to make sure that the inflation, or at least supposedly the inflation, is on check. And the first one is interest rates that everyone is talking about, but the second one is the Fed balance sheet. And this is the Fed balance sheet, guys. I really hope that you've been paying attention to it, because this is the key to knowing when the crash is really going to happen. So the taper that was supposed to start from September last year, and instead, as we can see, we pretty much have gone up on a straight line. Literally, this is what's happening, a straight line. And that means that the Fed, instead of really tapering, and I'm just looking at 1 year now, from February 2021, literally the amount of money that the Fed has stopped pumping into it is minimal. Like, you could almost draw a straight line through it. So the amount of money that is now being pumped into this month only, just for this month, and this is an article from MarketWatch, 20 billion of treasury securities, so these are bonds, and another 10 billion in mortgage-backed securities. So the actual tapering hasn't happened yet, guys. And this is why the actual crash hasn't happened yet. Let's just understand why. This is very important. This is the meat of this video. So the bond market is what is leading the stock market. So in this environment, there is an inflationary market where the basically debt is very cheap, right? So you can issue bonds. As a company, you can issue bonds and just stay afloat. You just borrow money for very little interest, and so then after that you just survive. So that's why the bond market is so important. And as you can see, the bond market is still very much stable. We haven't seen like an incredible increase in the 10-year yield of the bond at 10 years. So what we just saw was it's gone up to about 2%, but as I showed you earlier, the amount of money that the Fed is pumping in hasn't changed yet. So what is actually happening is basically that the Fed is still pumping in as normal, business as usual, but other businesses, let's say banks, they have caught on to it, and they think, okay, right, the future, we're gonna have a higher yield, and so what we can do is play the fear game. And so when the Fed comes up with their scaremongering communications, let's say they say, oh, we're gonna taper, we're gonna increase interest rates, and then the CPI data comes out, the inflation comes out, and it looks horrendous, right? So all of that, what they do, all of a sudden, they pull out the money from the stock market, they maybe let it drop a little bit, and that's what happened when we had a pullback a few days ago now. It seems that it's over, but is it really gonna be over? I just showed you that there are reasons to believe that the big one, the real deal, it hasn't happened yet. And to be honest, we're gonna look at when potentially might happen, but this is the question, guys, really the big thing. So basically they're playing this fear game. They're just trapping you in a trade. And in fact, the interest rates that everyone is talking about, that will be the second tool that the Fed is using, and the based on what I see from the balance sheet, it looks like that they're gonna use, and probably only that one. I don't think they're gonna reduce the tapering anytime soon, reducing basically the amount of money they're pumping into the bond market. They will only increase interest rates. And that will be an incredible, unprecedented time, because imagine that there are literally two things going on. On one side, Powell basically is pumping money into the bond market, is literally putting money into the market, and on the other side, the same person, Jerome Powell, is taking money out by increasing interest rates. He's sucking and blowing at the same time. So you understand where this is kind of going. It doesn't make sense, and especially it kind of will it work for inflation? Well, probably not, and that's why we are still seeing so much inflation, as opposed to actually seeing a bit of a slowdown. You would expect that for this alleged tapering. Well, I just showed you that the tapering, it just didn't happen, hasn't happened. What we saw was just a slight reduction, really minimal, just almost imaginary. Basically, the amount that has been reduced is ridiculously low. And now I'm going to tell you why this happened. Well, in the US, but in many other countries as well, in the UK, which is where I live, by the way, all governments have borrowed a lot of money, like just trillions and trillions. And they're all hoping that the interest rate they're paying, the governments, is gonna stay low. If the Fed will stop pumping money into the global economy, not just in basically the US, but the global economy, well, all the interest rates of all the governments that they're paying will all go up. And also, if you have a mortgage yourself, or if you borrow money for any reason, your interest rate will go through the roof. And so basically, what is happening is very interesting. On one side, you have inflation that is growing and growing, and it seems to, at least we didn't see an incredible increase like 1% or 2% literally every month as growing, but we still saw an increase, which is very bearish, because you know that when inflation hits so high, we will see a correction, we will see a potential recession in the economy, not just in the US, but worldwide. And so this is very bearish, but at the same time, we have the Fed still pumping so much money into it. So this is where basically the market, the big crash, hasn't happened yet. Now, when this will happen, well, I'm gonna make more videos about it, because as you can understand, this is work in progress. But as you can see, the Fed really calls the shots here, and at this point they are really in a tough spot. The interest rate increase that should happen in March 2022, so literally next month, and that Jerome Powell will have to put up, well, that might really happen, but it won't do much, to be honest. As we saw, the balance sheet is what is really driving the market. And so I am pretty sure that they will still pump this money into the market, and that is the one thing that you have to have a look at. So other than that, thank you for watching, and see you in my next video on the Fed and the economy.